All right, guys. Today, I want to talk about Michael Saylor. Michael Saylor, at the moment, for those of you who have not followed him, has been on a massive tear lately. He has basically made about $4 billion from his purchase price for Bitcoin at average price about 31,000, and at current prices at $52,300. Michael Saylor is already up about $21,076 per Bitcoin. Now, a lot of people think that Michael Saylor is, let's just say, crazy, because he went ahead and levered up his balance sheet at MicroStrategy and decided to pretty much go all in on Bitcoin and create a little mini ETF for himself. His total profit, if he sells right now, would be that $4 billion number. Now think about that for a second. This man was buying all the way down, on the way down when Bitcoin was crashing, and he held on like a champ. And that's the reason why this man is probably going to end up being the best trader, best investor of all time, because when everybody was dumping and people were calling them, he was going to go belly up. Saylor went ahead and started to lever up his balance sheet. And now he's practically almost doubled up on his initial investment of about, $4 billion. So the thing is, it's a slow and steady race. He didn't want to make 10x. He didn't want to make 100x. He didn't want to make 50x. He just said, you know what? I think Bitcoin is here to stay. I think that I'm going to go ahead and double down on my initial investment. Now, I'm going to tell you guys right now, this is not normal, okay? Because most people would pretty much put the Bitcoin in and start to cash out once it starts to go up. But this man is saying that he's not going to sell. So if Michael Saylor's not selling, I'm not going to sell either. And I got my average Bitcoin price in the low 20s, high teens, and I was able to kind of capture some of that based off my 7 months. So I kind of front run Michael Saylor a little bit, which was actually okay. But the one thing I want to say though is that this run has just barely begun. And the reason is very simple, is because there's no retail right now. Now you are watching this channel because you're smart. You are now thinking to yourself, I'm just want to listen to what's going on because Bitcoin's now at 52,000. But keep in mind that in the last couple of months, a lot of retail did not come in. They actually ended up selling Bitcoin back in October, November, December. In fact, majority of them right now are still on the sidelines. And one of the reasons they're still in the sidelines is because they believe that we're going to get a crash. Okay. So when I say they believe, I'm saying that a lot of the retail, and even if they are buying, they're not buying by a lot. There is no other time right now. Like the dip that we got at that 38,000 when the ETF got released, that was literally your dip. Anybody else who thinks that we're going to go lower than that, I think they are thinking for some sort of magic sell-off that's going to happen when traders start to take profit. If Michael Saylor is not taking profit at 52,000, I don't know who is. The other thing also you have to keep in mind is that the people who are buying Bitcoin right now, these are your ETFs. Let me clear that very clear right now. The ETFs are dominating the exchange volumes right now in terms of purchasing. And these people, these institutions, they will not trade Bitcoin unless someone sells the ETF, okay? Now, granted, if the inflows slow down, then what's going to happen is that the overall price of Bitcoin is going to come down. But hear me out for just a little second here, right? We're heading into March and April. We got our halving cycle in April. If we sell off right now, let's assume we sell off tomorrow or next week or by the end of the month, we only have like about a month before the halving cycle happens. Now, historically speaking, the halving cycle is actually a very bullish event after it happens. So let me just give you a scenario. Let's assume that we sell off now in March. That really means that you only have to be down in your position for about a month and a half at best. Once April kicks in, May, June, July, and August, going into the summer, we're going to have a massive blow off on Bitcoin. So the question you really want to ask is, how low can Bitcoin get from this level until the halving cycle? Now, some people are predicting 32,000. It's very, very possible 32. So if we take 52, we go down to 32. That takes you about let's just say a little bit like 30-40%, like maybe about 40% decline from that point. It's not going to be exactly a 50% haircut. So let's assume between 30-40%. Let me do the numbers a little bit just to give you an idea. If you're not margined and you're not doing anything crazy like borrowing money and doing all this other crazy stuff with Bitcoin, and we take a $52,300 Bitcoin and you minus, let's just say, a 32,000, just to be on the conservative side, you're looking at a $20,000 drop from these levels. Now, I will tell you that Bitcoin has historically, that's about a 38% drop. I'm going to tell you right now, Bitcoin has done these type of drops before. It's done that. It's done 20%, it's done 30%, it's done 38%, it's done 50, 60, 80, 90%. So it's within the realm of possibilities that the price of Bitcoin can come back down. If it does come back down to $32,000, okay, that's going to be a gift from the Lord above. Because what's going to happen is that is going to be the last time you're going to see Bitcoin at that price right before the halving cycle. Now, I hope that it gets down to down 40%. I hope my investments go down by 40. The reason why I'm going to tell you that is because if it does go down by 40%, you're going to get some sort of capitulation from all the traders and all the FOMO people that came in this month and last month. And those people are going to get washed out. So you're going to establish a brand new set of buyers. The buyers that we have right now are separated into two categories. Obviously, your institutions, which bought up a lot of that 38,000 that's coming in. And there's a lot of FOMO buyers that are now entering into the market now that the market is breaking past 50. Now, my personal hunch, and again, this is kind of like looking at some data and looking at a couple of things happening, is that the institutions are pretty much going to stabilize the $38,000 price point for Bitcoin. Anybody who sells below 38, okay, are going to be all those people who panic sell. They're going to be the people who are FOMO in from, let's say, 40,000, 42, 45, 46. They're just basically packing in, coming in, pushing the price up to 50. The institutions are coming in. And what I envision that's going to happen is they're going to push it up a little higher. And then there's going to be this kind of like scare, and then the whole thing's going to come down. Once we go down to 32, if again, that's the bear case. If we go down to 32,000, then at that point, it's going to be a super all-in call, right? Because even if we go down below 32, let's say they exaggerate the push down to, let's say, high 20s or mid 20s or whatever the case is, now you've got enough gas for the halving cycle. You've got a whole bunch of people now who are going to look at it from the halving cycle perspective. The people who are buying, who bought it before buying it for the ETF, they were able to dump it to 38. So what's going to happen here is whatever it is the scare is going to look like, whatever it is the sell-off is going to be, maybe the Fed comes in and says they're going to raise rates, or maybe Bitcoin is going to get banned in this country, or whatever the reason is, that's probably going to cause that panic sell to 32. Now, that's the base case. Now, the neutral case, which is a sideways case, is that Bitcoin kind of stabilizes in the 40s. So it kind of like meanders 48, 47, 52. It just kind of does this little sideways thing. And then at that point, we're getting ready for the halving. And that would be kind of like your neutral, your accumulation, zone, where there's a lot of resistance. There's a lot of people that kind of want to get out. There's some people that say, you know what, I'm kind of done with this asset class. Remember, 50,000 was a very important psychological level. When we broke 50,000 last time, it was under a pretty bad scenario. So that was going into the 2022 bear market. And a lot of people are trapped in that price point. So what I usually try to tell people is that 50,000 psychological point, it's much more important than a 40 and a 20,000, because 50 is like that half point between 100,000. And so again, kind of using round numbers here in people's psychology, is that people look at this and like, 50,000. If I buy 50,000, I'm pretty much going to double up to 100 if I think it's going to double up. So maybe I should buy 50,000, versus saying, if I buy at 40,000, I don't know. And 20,000, I'm not really sure, because that one looks like it's going to go down. So basically, we're kind of flooring here somewhere in this 40, 50 range. I wouldn't be surprised if we go down to like low 40s, right? I mean, just to kind of, maybe a 20% drop here would kind of be okay. The other bull case scenario, which is like my super bull case, would be that we come down to, go over 50,000 and we slowly kind of tread upwards. We don't really necessarily go up parabolic. But if we do go parabolic, then get ready for that dump. But as long as we're just kind of edging, and then get into the halvening cycle, we kind of dip a little bit, maybe into like, again, the high 40s. And then all of a sudden we just kind of ram up to April. That's going to basically be my super bull case. I don't think we're going to go parabolic here, just because there's a couple of reasons why. The parabolic moves usually happen after all-time highs. They don't happen while Bitcoin is under the all-time high. And the all-time high was about 70,000 on our last cycle. So we did hit about 69 and change. And even then there wasn't a lot of buying pressure at that point. So realistically, we're looking at somewhere in the 60 range, which is not too far off from here. So if we do blow out the 60, let's say we go 65, 60, 67, and we blow out 70 for whatever reason, just get ready for the ultra bull case. We're heading out to we're basically going parabolic at that point. I don't want that to happen. That's really what I don't want, because once we get to like 100 past 60,080, then that's where all the FOMO comes in, and then now you're running up to the problem where Coinbase crashes and people can't sell, and you got all these other issues. So what I really want this to do is meander a little bit, drift a little lower, and then slowly start to add more positions as we start to dip. That will give me a little bit more time to accumulate. I hope that we do get that 20-30% drop at some point from here till April. But again, that's just, crazy price predictions, and we don't even know what the price could be in the next couple of weeks. But historically speaking, after Bitcoin does a 50K break, usually, and especially after the new year, the new year started last Saturday, Bitcoin has historically for 15 days straight has gone up. So if you take a look at the 10th, which was our new year, we are only 4 days in. So historically speaking, okay, this rally should last for about 2 weeks. So that puts us somewhere, and again, this is just a rough estimate, that puts us somewhere in about the 25th or the last week of February, which actually makes total sense, because usually March is going to be that kind of high volatility, high sell-off period where you kind of don't want to have too much risk on. And generally that kind of sets us up for April. So generally what you'll find is the market will technically trend up a little bit for the next 2 weeks. And generally we'll get kind of like these little blow off runs, but we're getting really close to this March month. They call it the beware of the Ides of March, for a reason. Okay. So, historically all the major sell-offs have happened in March. And March tends to be the point in which we have major reversals in trends. Let me give you an example. COVID 2019 was getting close around this period. It was a little bit, in February, but the low happened around March 19th, 2020. And our turning point, a lot of our turning points that happened usually happen like March of 2009. That's when we had actually the rally happen. Was in March of 2009. That was our second one. March of 2000 was the end of the NASDAQ run, the .com bubble that popped in March of 2000. And then you can kind of go back in history. Most of the time, you're going to get usually that March period, usually is that second or third week of March, where everything just kind of starts to collapse. Now, it could be for whatever reason. It could be just because the news event, people are selling it because they want to take profits, and then it just kind of feeds upon each other. But we're heading into that March period, which generally gets me a little bit more nervous. But one thing I do want to say is that right now it's a very sweet spot, because you have about 2 or 3 weeks before that event happens, whatever that event is. It doesn't really matter. And generally, crypto goes down first. So generally, crypto has been leading the market for the last couple of months. And what usually happens is crypto kind of runs a little bit further in. And then once crypto starts to kind of go the other direction, everything starts to kind of fall in line. So at the moment, crypto is a leading indicator in many of the big transactions that we're having in both the NASDAQ and the S&P 500. Now, I do want to mention one other thing, okay? One other thing is that halvening cycle this time around is going to occur on an election cycle year. And well, generally they do. And one thing that's actually happening is on deck is we actually are in a cycle in which we have a high interest rate environment. and there is a hope of a rate cut. In the previous election cycles, we were kind of working off of that idea as well, but we were already in a low interest rate environment. So this is a little different in the other cycles in the fact that if the market is rallying on a high interest rate environment, you can only imagine what would happen if they start to cut rates. So we have an extra catalyst that may not be factored in just yet. Now, when I say that's because the market's already anticipating this 6 month, this 4, 5, 6 rate cut thing, but what they're not anticipating, and again, this is going to be the kind of like the what's that word? The wild card. What they're not anticipating is how much of a cut is the Fed going to make, right? And so I think that at the end of the day, these risk on assets are going to usually follow, whatever path of least resistance is. And the path of least resistance right now is an up market. The other key point I want to kind of emphasize is that Bitcoin at the moment right now has not been advertised to clients. It's been already almost like a month since they released the ETF, and they did release commercials and things like that, but people are still kind of figuring out how they're going to market this thing. And the price has to continue to go up, because any investment advisor that's worth their salt is not going to recommend this when the price is, it's going to recommend this when the price is going up. If the price is going down, they're not going to recommend it because it's still brand new. So this asset, specifically Bitcoin, it needs to outperform equity markets for someone to justify purchasing it. So there's a lot of incentives at the moment that we haven't factored in that would allow these investment advisors to shill Bitcoin. And that could provide an incentive for Fidelity and all these guys to, let's just say, soak up more Bitcoin so that that price can continue to go up. See, the only way that this is going to succeed is people usually look at one thing and one thing only, and that's going to be price. If the price continues to go up, it will do all the marketing for them. They don't have to talk about like digital gold. They don't have to talk about like remittances. They don't have to talk about inflation, none of that, because none of that's going to matter. What will matter is if the price goes up and these people are not in it, and they did not actually recommend that to their clients, they're going to lose a lot of clients. And so Fidelity and BlackRock and all these other ETFs that just launched their product, there's a very, very high chance they'll be incentivized to continue to shill Bitcoin to their high net worth clients. And even right now, they're incentivized to continue to push that onto pension funds and things like that. So to me, we have a huge tailwind. We have a whole team, a whole world of traditional finance people that are most likely going to shill the bejesus out of this thing. And when they do that, when they get all their act together, when they go into the road shows, when they make their pamphlets, and when they do all of that, they're going to pretty much promote Bitcoin like it's never been promoted before. And that is going to provide you with two things. Number one, it's going to provide you with a floor. And number two, is going to also provide you with a whole wave of retail that never was even thinking about getting into Bitcoin because it was risky, or it was scammy, or it was very difficult to do. And that is going to push Bitcoin to all-time highs, right? That is kind of like what I'm thinking. And right now at 52,000, is it expensive? It just depends on your time horizon. If your time horizon is at least like a couple of months, probably it is. If your time horizon is like a couple of years, probably not. Because even if we do get a 40% drawdown, like I said, which is substantial, and you don't need that money, you can just go ahead and keep on piling in as the price goes down. You average your costs down, and then within a couple of months or a year, what's going to happen is you're probably going to end up back in profit. And so there really is the risk at this point is not so much about Bitcoin dropping. The risk is not being in Bitcoin when other asset classes are not performing, right? So that's the risk. The risk is everything staying the same or making your 5 or 10%, while Bitcoin just blows out another 2-3x for the year. So that's kind of like where we're at right now. I don't know. We're still early in the year. I don't know if it's going to happen tomorrow. I don't know if that 30-40% drop is going to happen next week. I don't even know if it's going to happen at all. But what I do know is that we have about 10 months to find out whether this thing is actually going to gain any traction. Now, I personally think yes. I don't know what you think. You let me know. I think that we are at the cusp of a huge rocket launch, and I'm okay with losing 40% of my portfolio value with the hopes that I can enter in at a cheap price. And if it doesn't happen, well, then at least I have my bags ready to go. Let me know what you guys think, and I'll see you again in this journey. CB up.